We shall now move to Lesson 2. How do you input the transactions? In this lesson, you will learn 3 important key areas. Number 1, how do you enter GST-related purchasing entries? Number 2, how do you enter GST-related sales entries? And number 3, how do you post the transactions to accounting? Let us start with the purchase transaction entries. The supplier invoices, purchase credit notes, purchase debit notes, and self-billed invoices will be entered via inventory and billing system. After that, you will post the transactions to accounting. When you make payment to your supplier, you will enter the payment transaction via accounting system and offset with the invoices, credit notes, and debit notes. Let us look into some important areas related to GST. There are received and received by self-billed invoice, invoice not paid within 6 months, and payment for outstanding invoices that are more than 6 months, import of service, and also capital goods handling. When you receive a supplier invoice from your supplier, you will create a receive transaction. After you have selected the item, the related GST tax code will be shown, and the GST amount is calculated automatically as well. Once the supplier invoice is posted, editing will not be allowed. If you need to issue a self-billed invoice on behalf of your supplier, firstly, make sure the supplier is a GST registered company. Secondly, make sure it is approved by customs and an approval code is given. Maintain the approval code in the supplier file maintenance. To enter a self-billed invoice, go to the Transactions menu and click on Receive Self-Billed menu. After you have entered and saved the self-billed invoice, you will need to print a copy of the invoice and send to your supplier. In the GST regulations, outstanding supplier invoices which are more than 6 months must, I repeat again, must have the claimed GST input tax be refunded back to customs. To cater for this type, go to Transactions menu, click on GST Bad Debt Journal, AP, and then select Refund Customs. Select the supplier, and all the outstanding invoices for more than 6 months will be listed automatically. Select the invoices which you need to refund the input tax claim to customs, and the financial entries will be generated automatically. These financial entries are generated based on the GL accounts mapped in the Housekeeping menu. Run Setup, General Setup at the GST setting. Click Save to save the transaction. When you have paid to your supplier, for those outstanding invoices where the output tax adjustment has been processed, you may now claim those GST back from customs again. To keep this record, go to Transactions menu, GST Bad Debt Journal for AP, click on Reclaim Customs. Select the supplier and only outstanding invoices of the selected supplier where output tax adjustment has been processed for tax refund from customs will be listed. Select the invoices which you need to claim back the input tax refunded from customs, and the financial entries will be generated automatically. These financial entries are generated based on the GL accounts map in the Housekeeping menu, Run Setup, General Setup, GST setting. Click Save to save the transactions. All imported services acquired for the purpose of business, except exempt supply of services, will be subjected to GST. The GST on imported services is payable by the recipient of the services using the reverse charge mechanism. An item with service type must first be created in a system via Maintenance menu item maintenance, then at the item file maintenance. To record this type of transaction, go to Transaction menu, click on Receive. Remember to click Import Service checkbox on the header to indicate that this is an importation of service. After you have entered the payment transaction, go to Transactions menu, open Item menu Creditor, then select Knockoff Bills to offset the invoice and the payment. GST on imported services is only accounted for at the point when the transactions are being offset. Reverse mechanism treatment for input tax (TX) and output tax (DS) is automated in the system to ease your transaction worries. The definition of capital goods under GST context are as the following. Number 1, it is capitalized under accepted accounting principles. Number 2, it is used in the course of furtherance of a business. Number 3, that it is not for the purpose of reselling. Lastly, each unit valued at Ringgit Malaysia 100,000 or more and exclusive of GST. To record this type of transaction, go to Periodic menu, Capital Goods, and select Maintain Capital Goods to maintain the capital goods details after you have purchased it. If your company is making wholly taxable supply only, then you can claim the input tax for the capital goods purchased in full in the period you purchase it. If your company is making both taxable and exempted supply, then you will need to make annual adjustments to the input tax claim. For equipment, machinery, vehicles, it is at 5 intervals. For land, building, it is at 10 intervals. When the transaction is saved, the intervals will be populated according on the type selected starting from the year of purchase. Next, let us discuss about sales transaction entries. The sales invoices, sales credit notes, sales debit notes, and cash sales will be entered via inventory and billing system. After that, you will post the transactions to accounting. When you receive payment from your customer, you will enter the receipt transaction via accounting module and offset with the invoices, credit notes, and debit notes. Here, we shall see the important GST related areas in sales. There are the tax invoice, credit note, and debit note with or without reason description. Prepayment is an important aspect too. We will learn about bad debt relief and also the bad debt recovered. When you want to issue an invoice to your customer, you will create an invoice. After you have selected the item, the related GST tax code will be shown and the GST amount is calculated automatically as well. You can print a tax invoice from the system. Once the invoice is posted, editing will not be allowed. According to Goods and Services Tax Act 2014, if there are changes in quantity, amount, tax rate, or cancellation of transactions, credit note or debit note must be issued by the related parties. When you create a credit note or debit note, remember to select the Update from Invoice option so that system will prompt the list of the invoices. Click the Accept button and the Select Invoice screen will be prompted. Select the related sales invoice. All information from the invoice will be copied to the debit note. In the Body section, select the reason of issuing the credit note. The reason is maintainable at Maintenance menu, Miscellaneous Files. Click on the reason Maintenance. In the credit note and debit note printout, you will see that the related invoice number, invoice date, and the reason is printed on it. When you receive prepayment or advance payment from your customer and it will be used as part payment for the supply that you are going to make, you need to account GST for the prepayment or advance payment. The prepayment or advance payment will be considered as inclusive of GST. When you enter the receipt transaction, select the prepayment option. Once the receipt entry is saved, financial entries will be generated with GST inclusive. In the GST regulation, the paid GST output tax for those outstanding sales invoices which are more than 6 months can be claimed back from customs. Go to Transactions menu, select GST Bad Debt Journal AR, then click on Bad Debt Relief. Select the customer. All outstanding invoices of the selected customer that have exceeded 6 months, as on the date set in Journal Date field, will be listed. Tick on the check boxes to mark the invoices to process. The financial entries will be generated automatically by the system with tax code to ease your journal entry transactions. They are strictly for viewing and not editable. These financial entries are generated based on the GL accounts mapped in the Housekeeping menu, Run Setup, General Setup, GST Setting. Click Save to save the transactions. When your customer has settled the outstanding invoices, you will need to refund the output tax claim to customs. Select the customer and only outstanding invoices of the selected customer where bad debt relief had been processed for GST refund will be listed in this section. Tick on the check boxes to mark the invoices to process the tax refund to customs. The financial entries will be generated automatically by the system with tax code to ease your journal entries. They are strictly for viewing and not editable. These financial entries are generated based on the GL accounts mapped in the Housekeeping menu, Run Setup, General Setup, GST Setting. Click Save to save the transaction. Transactions from inventory and billing system must be posted to accounting system. Only posted transactions will be taken for GST reporting. This is to comply with GST Act, where confirmed and posted transactions cannot be edited and will remain unchanged to support the values reported and submitted to customs in the case of an audit call. Changes, if required, will be carried out via appropriate adjustment documents like credit note or debit note. All posted bills need to be imported into accounting system for generation of GAF purposes. We have now completed lesson 2. In this lesson, you have learned about the important GST areas in purchase entries, important GST areas in sales entries, and the importance of posting and export-import of bills.